Hi, I'm going to walk through this example that if you attended the 9:15 a.m. class on Monday, we did not get to finish it. I will start at the beginning though. This is a made-up example. We have a doctor who opened a medical practice in February. We are looking at the impact of the transactions on the accounting equation for the corporation. Remember that all of these transactions are for the corporation, not the individual person. Remember that people are separate from corporations, the entity principle that we saw in Chapter 1. The first transaction is February 1st. Dr. Luke invested $100,000 in the business in return for common stock. This transaction will increase cash and increase common stock, which is an equity account. The next transaction is February 5th. The business borrowed $50,000, assigning a note payable to the bank. This transaction increases cash and increases notes payable. On February 8th, the business paid cash for land costing $105,000. Cash is decreased while land and asset increases. On February 11th, the business purchased medical supplies for $1,700 on account. The on account means that the business has the supplies and will pay the vendor later. The vendor has extended credit to the business. Medical supplies and asset will increase, as will accounts payable, a liability. On February 12th, the business opened. Not a transaction since there is no reliable financial measure, so no entry. On February 14th, Dr. Luke treated patients and earned service revenue of $5,600, which means that service revenue will cause equity to increase by $5,600. It also says that half of the $5,600 was cash, so cash increases by $2,800. The other half, or $2,800, will increase accounts receivable, amounts due to the business from patients. On February 16th, the business paid employee salaries of $2,300, so cash will decrease and equity will decrease because expenses reduce retained earnings. On February 25th, the doctor treated patients and received $1,500 of cash at the time of service. Cash will increase by the $1,500, as will retained earnings, since revenues increase retained earnings. On February 28th, the business paid office rent of $1,000. Cash will decrease, as will retained earnings, since expenses reduce retained earnings. On February 28th, the business paid $500 on account, which means it paid off $500 of what it owed. Accounts payable, a liability, is reduced, as is cash an asset. Now we total each column as I have here on the screen. Then add the four asset columns to get $155,000. Next we add the liability columns and the stockholders' equity columns, and we also get $155,000, so we know that assets equal liabilities plus equity. The accounting equation is in balance. Now let's answer some questions. The questions will be at the top of the screen. Question A, how much are total assets? Add up the four asset columns and you get $155,000. Question B, how much does the business expect to collect from patients? That is the total of accounts receivable and asset, or $2,800. Question C, how much does the business owe in total? That would be the total of the two liability columns, or $51,200. Question D. How much of the business's assets does Luke, the shareholder, really own? That is the total stockholders' equity, which is common stock plus equity, or $103,800. Question E. Finally, how much net income or net loss did the business experience during its first month of operations? That would be all of the revenues less the expenses, or $3,800. That's it. We are done. We will be practicing more in class.